Everyone, happy Wednesday. It's NFPT Live Day. My name is Erin Nitschke, and I'm here with my friend and colleague, Beverly Hosford. And we are with the NFPT, the National Federation of Professional Trainers. And we are a personal training certification and education company. And it is located in Indiana. I am in Wyoming, and Bev is in Montana. So we're kind of a little bit spread out, but we're a very close-knit family despite that. And today we are actually going to dive into the basics of business and kind of talk a little bit about what you need to keep in mind as you're tracking your finances, how to just stay organized so that you can increase that bottom line and help make your business successful. And Bev is our amazing business expert on this topic. She has written a ton of blogs about personal training, business management, offers business coaching as well. And not to mention, she knows the ins and outs of taxes for personal trainers. So she's kind of my wealth of knowledge today. So I will be interviewing her a little bit and asking some questions here and there. And she is going to give us an introduction to those basics. So if you are with us today, thank you for joining us, and let us know what business questions you have. First, maybe we could ask, what's the toughest thing for you in managing your own business in terms of that financial piece? Because it's really overwhelming. I find that as well. So if you're with us, tell us where you're from and what your biggest business trip up is. And then I will turn it over to Bev and let her talk a little bit about what's going on in her world and how do we get down to business.
Get down to business, Erin. It's snowing a storm here. It's so pretty.
Yeah.
But if I look a little dark today or my background's dark, it's because it's snowy out. And there's like snow in my background, but I did put up this fun little Christmas outline that you'll see later, Erin.
Oh, good. Yeah.
So yeah, we're going to talk about finances. So what I really want to start out with today is like the most basic thing that you need to do if you want to keep track of money and like Erin said, it really comes down to when you manage your money, you make more money. I always say it's the best way to make more money is to keep more of what you're already earning. And the best way to keep more money is to have an awareness about it. So if you think about your clients and they keep food journals or they report to you how much cardio they did each week, you got to do the same thing for yourself. So the first thing you need to do is know how many clients you're seeing. Like before we even get to money, keeping track of how many sessions you actually do and get paid for every day and every week for me is like the biggest foundation. And I used to do this in my appointment book. So at the end of each day, I would just put a number and circle it. Here's how many people actually came in today and I charged them, because there was the occasional like sick client that I wouldn't charge them or cancellation. And so I would just do that. And at the end of every week, I would take the total and I put it in a spreadsheet. I'm real old school. I just like to use Excel, and maybe that's not even old school. And you could even do it in your calendar book if you have a calendar book. I had a calendar book, old school. Well, and like Erin and I, we use these. This new. Yeah, Erin just got me into this new type of calendar. I just like having it on paper, especially because in the phone, it kind of just, it's hard to see, but on the paper, you could every day circle how many you saw. And at the end of the week, a total with a number circled. And then if you don't want to put it in Excel, it's easy to go back each week and not have to count them and just have that number. And that's like the first foundational habit I would suggest. Just get in the habit of how many people did I see every day? How many people did I see every week? And then you can probably guess where I'm going next is how many people did I see this month? And then once you've got that foundation, you start to have an idea of what's really happening in your business, because it might feel like a busy week. It might feel like there's a lot of money coming in, but it may actually be slower. And when you see those numbers, it motivates you to like find more clients or do some marketing, and it really gives you that real picture. So from there, then what I like to do is figure out how much money are you actually making for each session. So basically, if you're seeing 20 clients a week, what does that actually mean? And if you're seeing a client and they're paying you $50 and then taxes are usually like 20-25%. So that's going to take $10 off. So it's $40. And then how much is your rent? Is your rent per session? Is your rent per month? You got to figure out what are you actually making. Maybe you're actually only making $30. And so when our mind says like, I'm making $50 an hour, it's a lot different than our mind saying I'm making $30 an hour. So
big difference.
That number, I like to be conservative, like get it down as low as possible so that you surprise yourself at the end of the month instead of thinking you're making more than you are. Cause like, I know I'd be like, oh, I want to buy something. And it's like, oh, it's $50. And it's like, oh, it's one session. I can afford that. It's like, well, actually it's not one session. It's 2 sessions. So that's the way my mind works anyway.
Yeah.
So then you can take that number every month and multiply it by your like average number. And then you can start to see like how much is actually coming in every month. So it's not like a big surprise at the end of the year.
Right. I love what you said about when you manage your money, you make more money. Great quote. I mean, and it's so true. And I think your perspective about really translating that number into dollars to help you figure out like you really aren't making $60 an hour or $75 an hour when you take into account your overhead. And I think that's where some people get really hung up is when they go to price their services, they want to be competitive, but they don't want to price themselves out of the market. Mm-hmm. Well, that's where that research part is really important in finding out like, what is your overhead? What's the minimum number you need to make to be able to afford your own cost of living?
I like that. Yeah.
You need to not only know how much you're making per hour, but how much you're spending per hour.
Yeah.
So I think that's a really good point.
Yeah. And I'm glad you mentioned that because so you even take it a step backwards, which is trainers and fitness instructors need to know what their cost of living is. Like you're going back to like even setting rates, which I think is so important. Like when you're setting your rates and deciding what gym to work at, like how much does it cost for Erin to live? Like what is Erin's monthly cost? And then once we know Erin's monthly cost, then we know how much money we need to charge or make or how many clients we need to see. And so that's another huge foundation is adding up like what's my grocery bill every month. You can take your car payment or like your car insurance divided by 12. You could take your mortgage. Well, mortgage is monthly. You can just figure out like, what's my estimated monthly cost for me to live? Like if I was going to give you to someone else to take care of you, like how much would they need to take care of you?
How much does Erin cost to care for a month?
Exactly. So that's definitely, I'm glad you mentioned that. Like that is something else. That's another piece that if you have no idea how much you cost, I mean, you know that like my bank account's either positive every month or negative every month, but what about like, you know, actually I was just talking about this with my husband this morning because his packing and shipping store is doing really, really well right now. They're making a lot of money, but we're like, we know they're making a lot of money, but I'm like, what's your actual like daily cost, you know, so that we can take that gross income. And we got it down today that like the number that the cash register shows at the end of the day, he keeps 20% of that number. So it's like, when you see that number and it's thousands of dollars, you're like, wow, thousands of dollars. It's like he actually keeps 20% of that. And so it's like, it's just when you're a business owner, yeah. And then it's like, he's got to know how much does it cost for us to take care of our family. And we know what that number is. We have a number that we know we need to make every month to take care of our whole family. Because so if you have a family, you're going to need that amount. If you're an individual, you're going to need that amount.
Right. And I think that's really important to know, like, especially if you're just starting out and you say are looking to move someplace. You've got to start looking at what are the property taxes, you know, what's the industry, like what's it based off of? Is it travel and tourism? Is it oil and gas? Do they have a boom and bust economy? Like I'm just thinking of Wyoming as an example. It's a geographically isolated area for the most part. And it's a boom and bust economy because our industry is oil and gas. And we know the turmoil that oil and gas has faced, not just recently, but over the years. So if you're looking to move somewhere, get that peace of mind as well as, okay, what is the industry? Like how stable is the economy? What's the average listing price for a home or rent? Things like that. So it can seem really overwhelming. And I always find it when I teach my students about business aspects to tell them, okay, to break it down like into little individual steps. Like where's the most foundational place you need to begin? It's one thing if you're starting some business in your own hometown and you've already got that knowledge, but nonetheless, coming up with that number that you need to live on per month and account for the taxes that you'll have to pay.
Yeah, totally.
Yeah. Great points. I just want to ask a quick question to the audience is, as Bev was talking a little bit about her tracking and she's old school, which I totally join you in that. I have Excel and my cute little planner. I wonder if there are apps available, like if there are business owners, and you don't even have to be a personal trainer. If you are with us today, just tell us if there's an app that you use, because some people might gravitate towards something like that. I would not do that. I would much rather have it on paper where I can touch it and see it and feel it. But there's some awesome apps for almost anything that you want out there. So I'm just curious if any business owner that might be joining us or watching this later, if you do have an app that you use and you really like, please share that in the comments and let us know.
Yeah, that's definitely not my speed. I don't do the app thing. I don't try to do the app thing. I wouldn't even really know where to begin with apps, but I'm sure there are some great apps out there. I am just like a pencil and paper kind of gal. And then I have spreadsheets for the whole 10 years that I was seeing clients 30 hours a week. And I can go back and look at every single year, every single week, every single month and say like, how was this year? And was I growing? And it's really neat to see. So yeah, an app would be great if you're more of a techie person. But I liked having those spreadsheets on my computer. That's what worked for me. And I do want to mention one of my business coaching clients that I've helped with her finances over the years, because she works at 2 different gyms and sees in-home clients. So her financial situation is really complicated. And we figured out for each client what the take home was. So we sat down and we're like, okay, let's take out the taxes. We'll just take out 25%. And then this client is in home. So you're keeping everything else, minus like some mileage. And then this gym takes 30% of the session. So here's how much, and we made a spreadsheet for all our clients of how much money she makes. And we made spreadsheets for her to keep track of how many times she saw each client every week and every month, all year long, so that she could really see exactly what she was making. And then also decide which gym. At one point, she didn't want to work at 2 gyms anymore. So she wanted to figure out which gym am I better off at. And so having these numbers can really set you up to make decisions like you're saying about which gym should I work at, where should I see my clients, and having that foundation and just keeping track, that awareness tool. It's like the most basic foundation. It's like keeping a food journal. Like, how can you, and it can be overwhelming to like try to figure out taxes and all these different things. But when you just start, so if you're not doing anything right now financially, just start counting the sessions and just start counting that money and just start making that habit. And
yeah, I think you brought up a good point about your business coaching client that's the in-home, that sees clients in-home. That's a whole other realm of keeping track, because you have to figure in your gas and you have to figure in wear and tear on a car and that type of a thing. So there's, and your insurance alone will be different if you're training somebody in their own home. So that's good to know and good to mention that. Keep in mind, one of the foundational things is knowing the type of business you want to have and knowing, are you going to be an independent contractor for a big box gym or a small town gym or a moderately sized gym that has a variety of services? Or are you somebody that's going to be truly independent and be a traveling trainer or, work on a cruise liner or something like that? Figuring in your benefits as well, knowing how much you're going to need to pay for your insurance and et cetera. Like all of those all could be really, I guess, bundled into your cost of living expenses over time. Yeah, the in-home. So knowing exactly what kind of business you want to run to start out and trying to figure that out, just those foundational principles is, perfect point. Just start at the bottom, start at the basics.
Yeah, but it's never too late. If you've been training clients for years and your money is just like all over the place and you don't know which end is up or down, all you know is that your bank account stays balanced, or maybe your bank account's in trouble, whatever it is that's going on, it's never too late to get started. And you don't have to do an overhaul. You can just start small. And then you really need all those numbers to be able to do your taxes properly. And the taxes is where it really becomes fun, because that's where you can save money, because the government's taking a percentage of your income. And I think we'll talk about taxes maybe next week a little bit more, but having that financial foundation is huge. And if you're going to join us next week, then definitely like even just try to just look at like, what does a month look like for you expense wise? And what is like pick a month, like maybe not December because it can be slower, but pick a month or look at 2 months and take the average of how many sessions you're doing, and just having those financial foundations and those numbers is good. And then also the other one that you need for taxes is the write-offs, the receipts. So keeping track of your expenses, but that goes back to the knowing what your dollar amount is. Like, what is my monthly cost of living? And then above and beyond that comes all the fun stuff, like the entertainment and the clothing. And some people put that in their cost of living. Like they keep that in there. Like they have $50 a month for entertainment. They have $25 a month for clothing, which averages out at the end of the year of like $300 a year for clothing, whatever it is. And then some people, they just don't have money for that kind of stuff. So they don't put it into their baseline budget. And then if they have any extra, they buy those items. So there's a lot of different ways to figure out your average cost of living. Like when my husband and I first bought our house and moved to town in Bozeman, we didn't put any of that in there. We had no money for clothing, no money for entertainment. We're like, what is our just basic like food,
right,
housing, electricity, dog food. And then once we got on our feet and going a little more, we added in, like maybe $100 a month for each of us to like do whatever we want with type of thing, like get a massage or buy something. And then if you want to save up your $100 a month, you get, $1,200 at the end of the year to do whatever you want with.
Yeah. Woo. Yeah. One thing I wanted to mention that you just, it kind of just jogged my mind when you were talking about managing the money and keeping track of it, making sure that you have your own dedicated business account set up so it remains separate from your personal bank account, because you can get in some serious hot water with the IRS if you're kind of like, meshing those together. So having a dedicated business account, it's super easy to set up. There are so many options. I mean, I live in a town that's got like, I swear 100 banks. So, look around and see which one offers the best deal, checking account, make sure you have a debit account or some kind of credit card, whatever. And your banker or whomever is in charge of setting up new accounts can help guide new business owners in that direction, but just making sure that if you buy something for your business, that you use that account to pay for that versus like your own personal account and then trying to figure out like, oh, I'm going to reimburse myself. And then it gets a little ooey gooey. And if you're ever randomly audited, it's going to be really that much more difficult for you to kind of tease out this was personal, but then I reimbursed myself for X, and it can be just like a one-ring circus, and I don't think anybody has time for that. So just making sure that you have your own dedicated bank account that is just for your LLC or however you set up your sole proprietorship, whatever, however you set it up, just making sure that you've got that so that you can account for those deductions, those taxes, those write-offs, and then making sure that, and the tracking piece I think is also really critical. Like you had mentioned when you first moved to town, you and your husband, getting a house, things like that. Like you need a certain number of years of income in a business to be able to apply for a loan. So make sure that you've got, because in your own business, you're not going to get a W-2. You're not employed by somebody that's taking, that's bearing the burden of those taxes, Social Security, all of those things that, the FICA, everybody taking your money out of your check, you will not get a W-2. So you need to have that record to be able to produce, to pre-qualify for a home loan. So that's another benefit to that tracking piece.
Yeah.
So one thing I was going to ask you, when you first started your business, what would you say was the most challenging aspect for you in terms of like managing the financial piece?
Probably just how scattered it was. Like it was just all over the place. And I've always kept track of my money pretty intricately. I feel really lucky because when I was young, my dad taught me how to do budgets, and he's like, basically like, you're going to have this allowance every month. When I was like 14, I think he's like, you're gonna have this allowance every month. and you can do whatever you want with it. And I was like, what? And it was a big, and what he said to me is, I'm going to give you an allowance every month, but you need to figure out what it needs to be. And I was like, what do you mean? And he said, you need to figure out how much clothing you need every year. If you want to print I was really into printing photographs at the time, like printing photographs. He's like, we're going to cover your food and all like that stuff with the family budget. But he's like, anything that you want to do, like movies, whatever. He's like, I don't want to keep giving you money every time you need it. I want you to just get a monthly check and then you can decide. And I was like, wow, this is exciting. So I sat down and I figured out what my number was. And I remember I came up with the number. It was like $200 a month. And I was like, he's never going to go for it. Like, he went for it. And then I was like, shoot, maybe I should have made it higher. Yeah. But, I've been keeping track of money since I was like 14 years old, which is sort of unique, I guess. And so when I got into personal training, I knew right away, like, but then it like drove me nuts. Like, I'm like, oh my gosh, this week I had 3 clients. This week I had 6 clients. So I had to learn the other side of it. And that's why I say, like, if you're just starting out keeping track of money, start simple. Like, just start keeping track of the money coming in, or just figure out what your cost of living is. I think that's a great place to start. So that was the hardest thing for me, because I like it when the numbers are nice and easy to read, and they're simple. And so I knew since I was 14 until I was like, I don't know, 25 when I started training, I knew what my numbers were. Like, I had them down, and it was like, it blew up my mind. I'm like, oh my gosh, now I've got this changing income every week.
Yeah. That's a really good point. And what a invaluable skill you have acquired at such a young age. And it kind of makes me wonder, do they teach personal law and finance anymore, like in high schools, or, is that a class? But I think you're probably more the exception than the rule in terms of.
It doesn't really matter. It's hard to teach it even until it matters. Like, but my dad was like, I'm going to give you a check every month. All you got to do is figure out how much it costs for you to take care of you. And I was like, that got me motivated. It was a great way that he did it. And working backwards like that, like, and so it got me to sit down and really figure it out. And so I think once you have the business and you want money coming in, hopefully that's your motivation. Like, that's what I used to tease people. I'm like, you're a personal trainer, you want to make more money. First thing is figure out your cost of living, because there are a lot of hidden expenses. And I was always very old school, and I still am. I just keep my receipts flat out, like, and I just put them in folders. Like, I am so old school, it's crazy. Like, every time I buy something, I get the receipt, it goes in a folder, like, straight up. And actually, my husband's kind of leaned me more towards using the credit card statement now. So I stopped using the folders like a year ago, but that was because now I have another person to help me. So you can even just like, you can start there. You can just start, every time you buy something, just get the receipt, bring it home. And at the end of the week, go through your receipts. Like, my husband and I, every month we go over our budget. We look at what we spent, and we just have one credit card that we use for all of our expenses. And every month we look over them. And sometimes, like, when he's really busy with work, I'm like, well, I could just go over it. But we're like, no, we both need to look at it, because we both need to face the music. Like, you swipe that credit card constantly, and it's like, at the end of the month, let's sit down and face the music. And at the end of the month, one or both of us is always like, oh, yeah, I guess I went to, the co-op more than I needed to. This, like, what are these $5 and $6 charges at the co-op? Was that lunch? Was it? And so we both always get a little bashful at the end of the month. But I think if you just start doing that for yourself, like, just start looking at your credit card statement every month and keeping track of that can be a good place to start.
And it's to make the connection between, like, you being a business owner and working with clients, that's what we tell clients when it comes to that food log. Just like you mentioned, like, you look that over and you think twice when you have your food log and you've got to track something. You think twice about grabbing that handful of M&Ms, because, like, I'm going to have to report that and my trainer's going to see it. And so it's that awareness piece. It's an awareness tool, and it matters a whole lot when it's that money that you have to strive on and be held accountable for.
Yeah, a lot of times it's not that we're not earning enough money; it's that we're spending too much of it. Sometimes that's not the case. Sometimes you do just flat up need to make more money. but sometimes a personal trainer feels more busy than they are. They feel like they're running around, they're busy, but when they look at how many clients they're seeing week to week, they're actually not as busy as they think they are. And
Right.
then they realize like they could be spending some of that time on marketing. One of my mentors, he had the best piece of advice I've ever heard for a personal trainer who's just starting out. He said, decide how many hours you need to work every week or how many clients you need to see to pay your bills. And you spend that many hours working on marketing until all those slots are filled. And any week that you have less than that number on your book, you spend those extra hours marketing. And
That's
you
great.
basically put in that time. So if you need to see 30 people a week to pay your expenses and save for a vacation or pay off your car loan or whatever it is, pay off your education, then you need to see 30 people a week. And if you're not seeing 30 people in a week, you spend, say you're only seeing 24 that week, then you owe 6 hours to your business of putting in some effort. And that can work for a lot of different businesses. Like I think about Myra, the way that she runs her business. She has like one client for an extended period of time. She could even do that. She could just decide like, ideally I want to see 3 clients a month for sleep coaching. And I spend this many hours when I have 3 clients a month. And it's like, all right, if I don't have 3 clients in a month, I only have 2, then I need to spend this many hours, you know, and you can really crack down on yourself that way. So just, there's lots of ways to like hold yourself accountable as a business owner to make that money.
Yeah. And I think that's, you know, that you touched on the awareness piece and, you know, the tracking process, but accountability. You know, I think we could come up with like the 3 A's of business ownership. The first one being awareness, the second one being accountability, because it's different when you work for an employer. You're held accountable by rules and regulations that are already put in place for you. You have a cute little job description that boxes you in, and you've got a boss that may or may not be a nightmare, and you've got, you know, certain deadlines and certain things that are already kind of pre-programmed for you, unless of course you're in a position that's much higher and you get to make the rules. Starting out, that's a highly unlikely scenario. But yeah, the accountability, you have to be the one to hold yourself accountable, especially if you're not in an LLC or, you know, a cooperative kind of partnership in which you have a business colleague that is, you know, it's a 51-49% ownership, something like that. You have to do that. You have to crack the whip on yourself, just like you would hold your clients accountable. Mm-hmm. And I think that can be really difficult when you're spending so much time during the week holding everybody else accountable. You come home and you're like, oh, I do not want to look at that credit card statement. I'll do it later. So setting up that accountability piece for yourself, I think, would be an ultimate challenge for quite a few people, especially if they haven't ever been forced to do that.
Yeah, totally. Well, I've got the comments here, so let me pull a few up since we're like close to the 30-minute mark. Mandy says, my goal every month is to have at least $40 at the start of the next month. I use my phone to keep track of what I have to do. That's great.
That's great. Someone that can use technology, like Facebook Live is as techie as I get, people.
Billy says, life is like accounting. Everything must be balanced.
Beautiful.
Myra had said good morning earlier. Gail said hello earlier. Gail says she buys stuff on her credit. So to have a record, use one card for business. And so it's easy to sort. Yeah. And I think that, and then have a separate bank account. Yeah. That's what my husband and I do. And when we got married, we just have one credit card. And then every month we look through that card. And then we each still have our own separate cards. That,
your business.
Yeah. So business, you got your business cards, you got your individual cards. Amen for credit. Billy says, what's the difference between accounting and bookkeeping? Oh my goodness.
Really, Billy? You want us to answer that? No.
I mean, if I really want to like pick it apart, I can either look up the definition, but I think bookkeeping, I would say, is just like the keeping track, and then accounting is maybe getting more into analytics with it. That's what I would think is like, bookkeeping is just writing it down. And that's one habit to develop. And then the next habit is accounting, I feel like, is when you start to play with the numbers and like subtract and add. And that's what I was talking about with like, my husband knows how much comes into his store every day because the cash register keeps track. The accounting piece is how much does it cost to run this store? What's the daily electricity? What's the rent? If we take the monthly rent and break it down to daily, what's the daily employee cost? And then what percentage of your goods do you keep them? Because he sells shipping and he sells packages, and he estimates that he keeps about 40% of it. So it's like, anyway, I think the accounting piece is the analytics. There you go, Billy. Thanks for throwing us a curveball.
Perfect answer.
Does anyone else have any questions for us?
Yeah, if you do, throw them in the comments, and Bev can certainly answer them. She's the business guru.
Billy says, haha.
I think one last question I have for you, Bev, is, when you're estimating your cost of living expenses, do you recommend that people set aside like an emergency fund? Like,
oh yeah,
if you're a homeowner, stuff's going to go wrong. I'm just going to guarantee it that something's going to happen. Your hot water heater's going to blow. Your dishwasher's going to explode. Like, it's Murphy's Law for home ownership. But I mean, the same could be said for, having a car. Like, what if your alternator goes out? What if you need a new blah, blah, blah carburetor? Is that a car part? I don't know. So maybe setting aside a certain amount of money in your cost of living.
Yeah, I'll never forget, like, when I first started personal training, it was all about getting that client dollar amount to match my Bev expenses. And then once I matched my Bev expenses, because before that it was just about like, okay, I've got this job, I make $10 an hour, I need to work 40 hours a week to make enough money. Then with the training, I was making more per hour, but it was scattered. So once I got myself stable, then it's so funny how things happen. I happened to be house sitting for a client who was a finance expert. So weird to say this.
Funny.
I was house sitting for this guy, and he had this whole monstrous bookshelf of financial books. So I grabbed one while I was at the house and looked through it, and it said, like, you should have an emergency fund of X amount. It's just weird how, like, I happened to open to that page around that time, and he said, you should have an emergency fund of this amount. So then I set a goal for myself to build up my emergency fund. So instead of going from like, well, I am making enough money to break even, and then like, sweet, now I can like go buy a new, and you should give yourself some money to have fun with. Like, we have to have fun with life. But then I like had this goal. I was like, I want to save like, I think it was like 10 or 20 grand. I was like, I want to save 10 or 20 grand because this book says like that I should have that much. So I started working on that goal, and it seemed like it was never going to happen. But I'll never forget when I got to that goal, I was like, wow, this is amazing. Like, I now have enough money to like cover my expenses for, I think it was 6 months or something.
Yeah.
Or 8 months. I don't remember. But once I got to that number, I was like, well, now I want to make this number even bigger. And without revealing too much of my own personal finance, right. I just tell you, like, you can get there. Like, I started with nothing, with 3 clients, and I built myself up to enough money to, basically take some time off from training, move to Montana, have a baby, and not be stressed out about not earning as much money as I used to earn. So I feel like wherever you are, like, you can get there. It just takes time. Money just takes time. Like, and you've got to be aware, like you said, and you've got to be accountable.
Yeah. And then I think the last A I would throw in is maybe additional effort. Like you touched on that marketing piece about, you need to spend X amount. That's additional effort, because that's beyond you just working with your clients and doing what you are trained and certified to do. So you have to have that additional effort if you want your business to grow and to thrive.
Yeah. Yeah, that's the toughest thing. And that's the thing I see the most with coaching clients is they're so like, they're just very lackadaisical. And a lot of people get into business because they want the flexibility. They like to go with the flow. And I am the same way. Like, I like to go with the flow. And when I stopped seeing clients and started being a professional writer and teacher, I definitely had a hard time with like holding myself accountable. But I used that method. I was like, I need to work this many hours every day until, I'm earning back that money. And because it's just so easy to like work some days, work not other days. Like, just like exercise, it's all about consistency. Earning money is all about consistency, and to earn money, you've just got to be consistent in your efforts. And then we could get into a whole discussion about making sure those efforts are aligned properly, because just because you're on Facebook or whatever all day doesn't mean that you're going to bring in more clients.
Right. Yeah, there's an analytic piece to that as well.
There's another conversation. So, I mean, just going back to cover what I talked about today, like, I just feel like it's really important to just start keeping track, like figure out what your cost of living is if you don't already have that, and then figure out what's your average. Like, you could probably go back for the year maybe and figure out like how many clients you saw this year or what your average is. And if you don't want to go back, just start moving forward. Just start moving forward. January 1, start keeping track. How many sessions am I doing? How much money am I spending? And just keep it that simple.
Yeah, that's great advice. So I think we're probably at our 30-minute mark. I can't see the timer.
Oh, I'm just looking at 10:35, so I'm like,
okay. Okay.
Usually keep it 30 minutes, 40 at the most. So
I think you've offered some incredible insight, and it's really valuable. It's stuff that I think people would probably otherwise have to learn the hard way. It might not be something that you learn when you're in college or going through a certification. It's not that common knowledge. So I think if anyone has any questions about anything that Bev covered, please leave that in the comments so that we can address it. And then I think if you have any great business resources, anything that you used to help you get started or something you found truly life-changing or business-changing, please leave that in the comments too, because I'm sure that everyone would want to be able to participate and partake of those types of resources. And same for you, Bev, if you have any great business resources, just like that book you mentioned, if there's anything like, whether it's TED Talks or it's a, Kindle book or anything like that. Maybe we should add the planner pad in there.
We can put the planner pad.
For all you old school people.
Totally.
So.
Sweet. We'll wrap it up today.
Yeah, and I think next week we're going to dive a little bit deeper into taxes and kind of the write-off piece, your deductions. So if you've got any questions about that, please make sure you join us next week. We'd love to have you. And thank you, Bev, for your insight and your expertise and helping everybody get on the right path to business basics.
I love numbers. They're just
obviously.
Yeah, I just love numbers. They're so much fun and they really can help you out a lot. So yeah, join us next week at 10 o'clock Mountain Time or noon, right, on the East
Coast. And everyone have a great holiday.
Yeah, have a really wonderful holiday. And if you liked this episode, please share it. And I do want to just throw a disclaimer. I'm not an accountant or a bookkeeper. I'm just giving you advice from my own experience. You should always follow up with an accountant if you have any tricky situations. So
yeah, for sure. Good point.
On that note, happy holidays, and we'll see you guys next week.
Okay.